Hi, everyone, and thanks for joining us today for our next session, which is looking at the energy sector and specifically maintaining financial performance while companies are starting to think about this long-term energy transition. My name's Cailin Birch. I'm the global economist at the Economist Intelligence Unit, and I'd love to introduce our panelists for today. We have three distinguished panelists who are here to join us and talk about this very important but also very complex topic that we've set ourselves for the next 35 minutes. First, I'd like to introduce Chris Stark, the Chief Executive of the Committee on Climate Change, Joe Sczurko, Chief Executive of Consulting for Wood, and our final guest, Alasdair Grainger, Deputy Director for the Corporate Finance Advisory and Investor Relations at BEIS, the Department for Business, Energy and Industrial Strategy. Welcome all, and thank you for joining us.
Thank you.
Let's perhaps jump straight into the topic. Again, we've got a lot to cover, and it's no mean feat in a short half hour. But it's a particularly important topic to be talking about at the moment, we think, because we're in the middle of kind of a double disruptive transition, if you will. The first already observing kind of a transition to a low carbon economy, which will have an enormous impact and already is indeed on traditional oil and gas players. But then with the compounding effect of the pandemic coming in 2020, and evidently that's not fully worked itself out of the system now, we'll still see the impact of that this year. And we may be on yet another trajectory as part of that energy transition as a result. So let's perhaps start with the pandemic. And Chris, if we could go to you first, what sort of observations have you taken away from this short-term impact of COVID-19 on the energy sector?
Yeah, it's been quite a thing to observe it. I mean, it's not something you would typically want to see as an experiment, but we've learned a lot, I think, about what happens in these moments. I think that's a situation we would never have normally have seen. And interestingly, I think it's given us a little glimpse, perhaps, of what the future could look like. What we've seen from the pandemic is obviously a contraction in demand for energy, mainly because we haven't been requiring as much energy as we would normally do in times when we're not locked down. Now, here in the UK, that's had a pretty significant impact, particularly on the power system. We've seen especially that you've got these zero marginal cost sources that have become more dominant at a time when the wind is blowing and we have less demand for energy. They've taken up a bigger share of the total generation mix here in the UK, and that's a really interesting little insight, perhaps a little kind of glimpse into the future of what we see as fossil fuel generation starts to drop off the system, which of course is what needs to happen in this net zero energy system that we are now heading towards. So it's been a really interesting moment, if a little stressful and alarming.
Yeah, it is an uncomfortable experiment to go through, but educational certainly as well. Just a follow-up question to you, Chris, on that is that, so we've seen this initial impact in 2020. What do you expect to happen? At least let's look perhaps at the energy generation sector as growth starts to rebound in 2021. And I'm making assumptions here, but as we see governments across the world with varying degrees of urgency to return to growth, perhaps looking for the fastest way to do so, how do you see that transition moving in 2021 and perhaps onward?
Gosh, it's really hard to say. I mean, I think that for the work that we do in the Committee on Climate Change is driven, of course, by the climate issues. So that issue of net zero, which has taken on a kind of an amazing prominence in the discussion now on energy, really needs to frame up what happens next. So as we start to grow, the very obvious thing to say is that there are choices ahead for us. We are going to need something to stimulate the economy. There's a need to support investment. That investment could well be in the energy sector. And this is a really important moment, I think, to start to for investment, possibly accelerate some of those net zero investments. The glimpse that I've just referred to, world that we may have soon, where there is less fossil fuel generation on the system, more renewable generation, I think that should confirm to us that we can move towards that at an even faster pace. So as far as I'm concerned, this is the critical moment for us to start to frame up those net zero investments in the energy sector. And we know what they are. That's the other thing that's come along with the pandemic, is that we have more detail than ever before about the kind of investments that the UK needs to make to reach net zero on time. So this is a kind of really, really important moment, not least because at the end of this year, there is a substantial international test of whether the UK is serious about these commitments in the form of the COP26 climate summit. So it's a pretty interesting moment to be doing my job. It's an interesting moment generally for the UK, I think, as well.
Yeah, interesting. So an experiment, not just what we can do, but what needs to be done. So certainly a lot of lessons to take out from this year. I'd like to come back to that point in a moment, actually, perhaps when we get to further questions and discussion. But we could turn to you now, Joe. So we've talked a lot about energy demand and what that means for power generation. But broadly, elsewhere in the energy sector, what sort of observations have you taken away from this year of the pandemic, perhaps on the production or just other operators in the economy?
Right. I think there are 3 or 4 key things that we've seen in the energy sector broadly that reflect the response to COVID, the response to the challenges the sector has had in the last 12 months. I think first, we're in a cycle where operators, owners are sweating the asset. They're trying to get the most out of their life. They're trying to optimize. They're trying to make sure they can operate their current assets profitably in an uncertain environment. I think secondly, we have seen, probably accelerated by COVID, a shift to really drive digitization, optimization, demanning of assets, demanning of resources. So I think digitization certainly has accelerated in the last 12 months under COVID. You're seeing diversification, players in the energy sector adopting a diversified strategy. The topic of hydrogen has accelerated tremendously just in the last 12 months, and hydrogen's impact not only in currently or the way hydrogen can be used, but in the future with green hydrogen. But also more broadly, EV charging has now entered the discussion as another way that diversified players in the energy sector can play. Renewables, significant investments in renewables by major energy sector players, as well as the supply chain. So what I see is that energy players are now looking at and exploring how society will consume energy, not just how they go about producing energy for society. And the final change I think we've seen is the nexus or the joining up between energy transition, and sustainable infrastructure and resiliency. You can kind of think of those topics as being separate, but they also now more and more need to be looked at as being together. For example, under COVID, reduced amount of travel, reduced transit, downturn in use of energy. Well, that has an impact, for example, in the United States on the state's ability to raise revenues from gas taxes. We have to, and I think going forward, you'll see many players in the energy sector, together with governments that are responsible stakeholders in the energy sector, look at how energy transition, and sustainable infrastructure come together in the same equation.
That brings up a really interesting point about what's needed to kind of start us, if you will, out of this pandemic and kind of start that transition towards, you mentioned, sustainable infrastructure. The US is a particularly interesting example of that at the moment. Really ambitious spending in response to the crisis, another big stimulus bill currently going through Congress, another potentially almost $2 trillion in spending for the economy. And the government's also teeing up the potential for a big infrastructure bill, which would have a huge climate kind of focused core to it, potentially for the end of this year. But we face there the fear that, of course, enough will have been spent and fiscal hawks will be starting to kind of bang on the door of Congress, and we won't be able to see another kind of big push in investment until we get outside of the crisis, whether that's 2022 or onwards. What kind of do you see coming about in the investment space, knowing the scale of investment that's required to move faster towards the climate transition? And how do you see that playing into the current environment where we're still very much recovering from a crisis and economies are still fragile? What's your outlook for 2021 and onward in that investment link up?
Cailin, I think that the U.S. is really ripe now for a major infrastructure bill. A lot of infrastructure spending has been delayed for at least the past 4 to 6 years, and the country is really ripe for that, and it will be, I think, the next wave of stimulus. But I don't think that's going to occur until there's a higher degree of confidence that COVID is behind us. There's the latest talk that it's likely to be sometime in the midsummer timeframe, perhaps coincident with July 4th for political reasons, some announcements of infrastructure spending. I think the Biden administration is doing a lot right now behind the scenes to build a bipartisan coalition, so there is support. I would suspect the infrastructure component will be easier to swallow than the energy component, but I believe the current administration will certainly push for degrees of clean energy investment as part of a large bill to occur sometime in 2021.
And you think the appetite could potentially be there to drum up the cash and spend it even in a post-crisis environment?
I think it will be because certainly the administration and both sides of the aisle will promote this as a jobs opportunity, a jobs bill. Certainly jobs for infrastructure, jobs for clean energy, stabilization of the economy, and ultimately economic growth. So I do believe that will happen in 2021.
Okay, could see an exciting new platform. Then let's move to you, Alasdair. I think this is probably squarely within your wheelhouse as we're looking at the investment perspectives for the year ahead. What are your thoughts, again, on the impact of COVID on the energy sector now and potentially looking to the investment outlook for the immediate post-crisis recovery?
Yeah, so looking back, it was a year ago when the crisis hit, and I think we immediately pivoted to an entirely new way of working. And so, working with who my Secretary of State now was our energy minister back then, and we moved across to a whole new way of working, which allowed him to keep in contact with the industry in a pretty regular way. So we put in place Teams meetings right from the outset, just like many organisations. Whole organisation pivoted almost, it felt like overnight. And if you remember back then, a year ago, it was that gathering storm. We knew this was a problem. We knew it was going to hit all of us, but we didn't quite know how, and we couldn't anticipate for how long any demand reductions or setbacks would be. So it was a very uncertain period, actually, a year ago. And we've had the various waves and uncertainty since then. But that initial period was one of trying to plan for the unprecedented and not really knowing how the energy system and energy corporates would be able to manage that uncertainty. So I think taking a step back, we've done pretty well, right? Certainly from a UK perspective, the energy sector has been pretty resilient, and we've managed any of those uncertainties as best we can. We've worked really closely with the industry, and the Minister, now Secretary of State, was very keen to keep that dialogue open so that he could feed in to the government system any emerging issues as quickly as possible. And we had those. We had those on testing in the early days, if you remember, before the extensive testing programs, on the key worker definition to allow access to energy generation assets, oil rigs and other things to ensure that we were able to keep the lights on from a government-wide position. So, yeah, there was a huge pivot, but broadly speaking, I think it worked, which is great to have seen, and the industry really came together. Again, obviously this is UK specific, but the whole industry responded to that call from the minister, and we were able to turn that around pretty quickly and manage through those various unseen and unknown issues together as a sector.
Yeah, indeed.
I'm just going to say, I think as we look again to a broader future, as Chris alluded to, there's a number of things which have changed now, and we're not going to go back to, and what that looks like for demand predictability and many other things is still quite uncertain. So I think dealing with volatility, risk, and uncertainty, we've all lived through that in the last year, and I think we'll all be reflecting on how we make that part of our various business decisions in the next 6, 8, and 10 months. So I think it's been a shock to the system, one we've, broadly speaking, survived, I think, in pretty good form, and we can use that planning and knowledge now to build out as we move towards that change. We have managed, from a policy perspective, we've managed to keep the tyres on the road as well. The Prime Minister launched the 10-point plan, and we got the white paper out just before the end of the year last year. So I think we were pleased we were able to, although there was definitely a delay to policy making as we all focused on the emergency, we were able to come back to what we needed to do for the long term to put in place, as Chris alluded to, the steps we need to take to get us all to net zero. So I think we've managed to build on that foundation, albeit it was a bit rocky at times.
True enough. Rocky for everyone in every possible way. Can you talk us through some of those key elements that you're going to be looking at, perhaps in the kind of near term, say the next 2 years? As you noted, what needs to happen immediately to get to those net zero targets and to kind of get a feasible plan in place to meet the kind of time goals for that? What's top of mind at the moment?
Well, from a government perspective, we set out the high level detail in the 10-point plan and that white paper, and now there's an awful lot more granular sector level information that we need to impart and we need to agree with the industry. So now is the time for filling in the detail. I think Chris alluded to it, but this year politically, certainly in my neck of the woods, will be dominated by COP and by the Conference of Parties up in Glasgow, and how we make the most of that possible that world stage moment for the UK. That's going to be a real focus. So I think, bluntly, we're not really seeing far beyond that. That's a very imminent and significant deadline and an event for us all. Once that's finished, we'll then be able to take stock. But obviously, working closely with colleagues from across the Atlantic and elsewhere, hopefully that will be a really successful meeting of minds and an ability to bring forward the next phase and the next shift in that transition. What's really significant, I think, is that we've washed away, whether it was the pandemic or otherwise, any uncertainty about the direction of course we're taking. All political parties are aligned on net zero. There's absolutely no debate in Parliament on those terms. Plenty of other things to debate, but from an energy policy perspective, we've got the biggest chorus of support behind us that we've ever had, and I think we now need to deliver on how we actually get there and bring it down a level into the detail, and certainly from an investor's perspective, that's what they're looking for. There's a lot of interest and excitement, but they need a bit more detail and a bit more direction to get us there. I think they're the key points. And from a nuanced perspective, from a government perspective, our hands are slightly tied. Our spending review hasn't been as long-term as we expected, so we've got that to negotiate. And that's important to the industry and to investors because that's the government capital. So how much we have to invest alongside the private sector to get to net zero isn't yet finalised. There's some high-level commitments in the manifesto, but the delivery and the detail of how much the quantum that government can move is yet to be penciled in. So that's another important deadline for this year.
Okay. Chris, did you have any thoughts around to come in there in terms of, again, getting down into the specifics of what needs to happen now and in the coming years to get to those net zero targets?
Yeah, I mean that's really my job, is to try and work out what the path should be for the UK to get to net zero. We set the net zero target in law in 2019, so that is now the law. We have to get to net zero by 2050 in the UK, and that involves us doing something right across the whole of the economy. Now, we recently published a huge amount of advice on how the UK could do that, and the headline of it is that it's a very capital intensive transition. There's a lot of investment required across the economy in every sector. These are the technologies that we'll be using in that zero carbon world that we're heading towards. And the amount of investment required is large. It's about £50 billion per year. So we spend about £10 billion per year in the UK at the moment, mostly on decarbonising the power sector. Most of that is going into the renewables sector at the moment. We need to scale that up to about 50 billion. So that's adding an eighth onto total capital investment across the economy in any 1 year, and maintain that then out to 2050. Now, that's a lot of capital investment, but what's interesting is it also it results in a big saving to the consumer. So that's the money that we're not spending on fossil fuels anymore. So think of all the electric cars we'll be using in the future, all the electrical sources of heat that we'll have instead of gas boilers in buildings in the UK, as well as all the wind farms that we'll have for generating all those zero carbon electrons. All of that amounts to actually quite an appealing prospect as far as the consumer is concerned, because those investments eventually result in much bigger savings over time. So you can net those two things off, and what you see is that the net impact of net zero is actually now something approaching zero cost to the economy. And that's not something we were able to say just a few years ago, but it's that kind of impact that climate policies are now having, and the industry responds to them too. So here in the UK, you can see that most obviously in the story on offshore wind, which used to be the most expensive form of electricity generation, or amongst the most expensive forms of electricity generation, now amongst the cheapest. And that's really having an impact in the outlook for cutting emissions in the UK.
It's remarkable, to think about how quick and how different things now look they were just a few years ago. So everything that's come out of this first few minutes that we've had now is kind of resoundingly pointing to the investment picture and just how much needs to happen in the short term. If we could hone in on a specific segment of that and talk about kind of traditional oil and gas companies and how they go through this transition, needing to invest their own funds, needing to appeal to investors and bring them along in their own transition, knowing that they then face big constraints and kind of the legacy projects that need to be maintained while also pivoting to a very new future. So it's a very delicate, but also very cumbersome few years that we do face for this kind of quote unquote traditional oil and gas energy sector. Let's perhaps stay with you for a moment, Chris. What opportunities do you see for traditional energy firms? How do they not start? Because obviously we're already a few years in, we've seen some massive announcements from companies, but how do you see that happening and where do the opportunities lie?
Yeah, I mean, this is the moment really to get real in all this. I think if you're if you're chief executive in an oil and gas company, you've really got to start thinking seriously now about what this transition means. So if the world is going to be on course for the agreement that was made in Paris 5 years ago, then we're going to have to actually focus on achieving net zero globally, not just net zero in any one country, across the world. And that will have deep implications for traditional oil and gas business. And I suppose it throws up an interesting question. I don't know, the classic question, if you're in the green movement, do you push those oil and gas companies to transition themselves? Or do you push towards divestment entirely from those firms, putting them out of business? And I'm very much in the former, not the latter camp, because actually that transition will happen quicker if the oil and gas companies themselves make those investments. And there's lots of good reasons for an oil and gas company to want to do that. There's also lots of important expertise. And of course, they have big balance sheets at the moment to allow them to make those big investments and to support that and to finance them. So I think what we should be talking about here is helping those oil and gas companies to make that transition, giving the incentives for them to do so, moving into some of the things that we know we will need over that transition, including carbon capture, and especially into some of the areas where the oil and gas companies themselves will have deep expertise. So one of the new energy vectors or fuels is hydrogen. That's a really important part of the transition globally to net zero. And it will be oil and gas companies that have the kind of expertise to generate and create the hydrogen, move it around, supply it where it's needed. That's hugely important. Similarly, for carbon capture, here in the UK, we have an enormous potential to do carbon capture and storage in the North Sea and the offshore environment. That needs to be supported by the oil and gas companies themselves. And there is also an opportunity for those companies to diversify and move into renewables. I often think that's overstated, but I think there is a chance for them to move into, particularly here in the UK, offshore wind is something where the same set of engineering expertise is needed to put those wind farms in the waters around the UK. So there's a huge opportunity here, but I suppose it comes with that if they don't take that opportunity, there's a huge threat as well to those traditional businesses. So the next few years are the point really to make it clear, I suppose, if you're in that business, what is your plan? How are you going to support that transition to net zero globally?
Mm-hmm. Yeah, interesting. I quite like the idea of kind of pivoting off of really interesting, like the hydrogen play, as opposed to diversifying into as many different areas as possible, so as to be thinly spread, but maybe letting one unique area go as a result of that. Joe, let's maybe pivot to you on this. It's obviously still an enormous ask for a lot of companies who are still juggling a lot of legacy operations. How do you see kind of that transition playing out? What, in your mind, are those core steps to pivoting to a new energy future?
Right. Alasdair and Chris have come at this question from the governmental and policy angle. I'll try to come at it from the private sector angle. First of all, I think there's been a movement here to net zero now, carbon reduction now. We'll worry about the details later. It's time to worry about the details, and it's time to set some short-term goals, because ESG research has indicated roughly 10% of firms have spending plans that are compatible with achieving carbon reduction. So that's now got to be put on the front foot. So the first thing, I think the sector needs to look at the connectivity between energy generation, energy distribution, and energy consumption. And you only have to look at the recent events in Texas to really show how important that is, that those three things are woven together. So I think energy sector players need to understand where they stand in the generation, transmission, and consumption equation themselves, as well as how they relate with partners and others to the broader scale of energy use. So my recognition, or my guidance to clients in this particular sector is, first, it's time to put together a decarbonization plan, a specific decarbonization plan and roadmap. What does that touch on? It gets into what assets, in what jurisdictions, what are the priorities, what are the technical solutions that can be applied as part of the decarbonization plan for your business right now. I think it has to be acknowledgement there's going to be a combination of methods and means and methods on how net zero and carbon reduction targets going to be met. That's going to include elimination in some cases. That's going to include carbon capture. That's going to include substitution. That's going to include offsets. It's going to include efficiencies. So the decarbonization plan for any given organization or corporation really needs to take that high level look, but boil it down to answer those specific questions. And then I think the next area that's going to be critical for the energy sector to respond to and address is measurement. how do we go about, in a dynamic, real-time way, measuring carbon emissions? And it has to be dynamic and it has to be real-time, because just writing a sustainability report 12 months after is not going to be satisfactory to drive these near-term goals, near-term achievements, and progress on the journey that we're on.
Absolutely. Alasdair, can we pivot to you on that? What do you see as the kind of core priorities as part of that transition?
Thanks. Well, I think the first thing to say is that the boards of oil and gas companies are pretty sophisticated, amongst the most sophisticated corporates that there are in the world. And they've been moving in this direction for some time. It's not as if they've just woken up to this last Tuesday. They've been investing really heavily, especially in from a UK context. There's been a lot of M&A that the oil and gas majors have been doing to buy into key aspects of net zero and low emissions. So they've been doing that for a number of years. That's not a new thing. They're pretty savvy operators. They've also likewise pivoted out of the North Sea. So there's very few, if any, of the major listed oil and gas corporates left in the UK North Continental Shelf, and they're doing that for strategic policy reasons, right? They know where they need to focus their capital and activity. So I think they're pretty able to manage these types of issues. They've pivoted as businesses before, sometimes into renewables, maybe not so successfully, but and they can do it again. I think there's little concern that they'll be able to do that. I think just picking up on one of Chris's earlier points, I think government in general has actually been a bit guilty of trying to push oil and gas corporates into renewables, and the alignment with hydrogen, because it's all chemical at the end of the day, is a much better one from an oil and gas industry perspective. Shell were involved in one of the aborted CCUS competitions we held 5 years ago in the UK, so they've been doing that too for some time. But I think there is a higher degree of alignment with the skills in the oil and gas sector, with certainly with the hydrogen economy and CCUS. So I think there's a role for them to play, and they are already playing that role. They don't need government or anyone else to tell them that. I think they've come to that conclusion themselves. And if they haven't, their shareholders are certainly starting to put significant pressure on now. And we're seeing that through the work that Mark Carney's doing in the build-up to COP. There's a real focus on disclosure, on transparency. There's a whole new economy actually springing up in terms of advisors to give you that information as a corporate board. And so it's a really active area of the economy. So I'm not at all concerned for oil and gas majors. I'm sure they'll be able to work out through themselves how they can transition and support this move.
Mm-hmm. You mentioned a very interesting point there, and I've been wanting to come back to the idea of kind of investor expectations and managing all of this again through a necessary and ongoing, indeed, process, as you noted. But we've seen again some massive announcements by oil and gas majors in recent years with really ambitious and very impressive targets for where they want to get to be honest, for again, a traditional actor. But not all those announcements have been met with share increase prices. In many cases, it's been a disappointing reaction from investors. Let's stay with you for a moment, Alasdair, but for anyone else who'd like to come in on this, where do you see that disconnect? Is that kind of the link between short-term returns and long-term, more strategic climate planning that you think in the investment sphere just isn't quite linked up? Is there something else at play? What's happening in that dynamic?
Well, one component is clearly the markets in which the oil and gas majors are operating in are not for all at the kind of bleeding edge of net zero. They may not be in Europe. They may have Asian or African markets that they're active in, who aren't, frankly, as far forward on this curve as possible. So, looking at their overall activity, it's only a small slice, which perhaps is directly relevant to the net zero transition. That will hopefully change over time, and that pressure will be felt across the organisations. But clearly, there is a building interest from a shareholder perspective. Again, tends to be more focused in certain markets, but those are important markets. So I think we are seeing that transition happen. It's maybe not as homogeneous as it could be, but it's definitely beginning to move. And I think there is a lot of focus on that sector from a third party or those looking to influence. I think they see it as quite a significant cap or ground to have to be able to shift the structures of some of these large corporates.
Chris, can we maybe come to you on that? Thoughts on kind of, again, this setting investor expectations through the transition?
Yeah, this is such an important point because I think we're really at the critical moment at the moment where the investor community, and it is a very diverse community, is really starting now to get to grips with these climate targets. I rather like the way that that Mark Carney in his task force for climate-related financial disclosure. It trips off the tongue, but these new financial disclosure rules that have been very much a transatlantic endeavour to come up with, looking at the climate risks and how they should be better disclosed in large corporates. He looks at it in one of two ways. Basically, that climate change presents a risk in its physical form. The physical risks of climate change will have an impact on the assets of any business, but also the transition risk. So the risk of the business is not in the right transition as we move away from fossil fuels. Really, really important, I think, to look at it in those two ways. And I think the investor community is now waking up to that real risk. It's a real risk. We haven't been pricing climate change properly in the way that we valued the assets of corporates. And I suppose at the heart of that transition risk is this really fascinating development, and it is a recent development, that standard economics are going to kick in soon, that the traditional energy sources are being outcompeted by the low and zero carbon alternatives. So you can see that very obviously in the renewables sector, but that's a big disruption to the bottom line in a traditional energy business. Now, when you couple that up with cheap batteries in the automotive sector, you have another big disruption there. So you're seeing these big disruptions which are not solely about climate change, but are rather being driven by the underlying innovation that's leading us to be more optimistic about our ability to cut greenhouse gas emissions. That's really kicking in. And I think investors are now thinking more about the extent to which assets might need to be stranded if we're not on that, if that corporate is not on that journey to zero carbon. And that real impact is, I think, causing consternation amongst investors, consternation in boardrooms as well. So I think that's really interesting, and I would say quite exciting, because I think it's throwing much more light on how quickly this transition could happen. And then the other thing is that we are seeing lots of corporates themselves make these commitments to net zero. You see that in many of the oil and gas majors, for example. But those net zero commitments are not going to be real commitments if they're only being met through offsets. And I think there is a growing awareness in the investment community that offsets, growing a forest somewhere in the world, that's not enough actually to be meaningfully on that journey to net zero, and crucially to meaningfully maintain the value of that corporate as we head towards net zero. So I feel very much that this is in the next 12 to 24 months, we're going to see much more of this investor-led change in sentiment towards decarbonisation, rapid decarbonisation and net zero.
Another volatile year ahead of us, I have no doubt. Joe, did you want to come in on that as well?
Yeah, just to pick up on a couple points that Chris and Alasdair raised, the point of stranded assets certainly has had an impact on share price for some of the majors. That needs to be acknowledged. Sustainability reporting, carbon disclosure, and measurement will be major drivers for the oil and gas majors and energy majors. Once those requirements are put into play and driven by shareholders and intimate shareholder and stakeholder interest in those topics, I think you'll see some massive change and rapid advancement. I think another point I'd like to make is that we don't have a landscape of energy companies that are all hurting. I think there's a number of examples of progressive energy companies that have emerged in the last 3 to 5 years. Ørsted, Iberdrola, Enel, there are others where they've seen stock appreciation through their aggressive moves in the green economy. And while some oil and gas majors that have made investments have not yet seen those returns come forward, I believe that as disclosure goes forward, as there's more clarity and predictability, and as some of these decarbonization plans go in place, I think there's an opportunity that the entire energy sector can see a rebirth and a revaluation.
Interesting. Alasdair, you wanted to come in.
Yeah, one of the common heuristics that we all use is that there's an industry and there's a government, and the two are completely separate. But bluntly, that's a very Atlantic way of looking at things. The US and the UK are extremely liberated, and we have that full distinction between those activities. But most of the rest of the world, including in the oil and gas sector, that isn't the case. There's huge amounts of even some of those companies that Joe just mentioned. Huge numbers of those have significant state-backed activity, and that's why I think that link to policy is really important. Because when a country moves forward and hopefully puts forward a NAMA plan that's extensive and really engages with the COP process, and as clear as night follows day, you'll see that their corporate interests, in terms of the shares that they're holding in a number of the state entities, whether that's state-backed exploration companies in many cases, or or broader parts of the energy system, then those corporates will start to change too. So I think there's a very strong link to government policy, because we do assume that everyone is red in claw and completely market dominated. In fact, there's actually a relatively small number. Of course, there are some, a relatively small number of corporates have no link back to a major to a state-backed supporter of some form. So I think it's really important that we move forward on policy as well as on market design.
Absolutely. I'm very sorry to say that brings us to the end of our short time for this panel. I think we've covered a huge amount of ground, and certainly I've come away with a lot of very interesting takeaways. We certainly could have had quite a bit more time to go on this. But again, thank you all so much for joining us today and contributing your insights. As you noted, are at such a pivotal moment, and it's going to be very exciting to see what this means for the industry and for government as well. And as you noted, Alasdair, to see what sort of interconnection we can find there to get towards what is becoming an increasingly kind of unique and joined up goal, but perhaps we're not working necessarily in as joined up a way as we will be in a decade's time, or hopefully even less than that. But thank you all again so much for joining us today. It's really been a pleasure. And for the audience as well, thank you for joining. And please do stay tuned. Next, we'll have an interview between Charlotte Howard and Ben Van Beurden, Chief Executive of Shell. Thanks, everyone.